want to make sure that your name or what have you is not broadcast, please do come up to me in the break. But this is for a lot of the members, IoD members and businesses who are not based in the London region, who for this is a very relevant topic. So without any further ado, just by way of brief introduction, my name is Ali Renison. I head up EU and trade policy here at the IoD. I know most of the people on this panel through a very interesting trade policy world on social media, or it's certainly how I met most of them. In fact, I now have more trade WhatsApp groups, including one for a football team, just for people working on trade than I do all my other WhatsApp group chats. So I think that is a reflection of how much Brexit and trade has become the ties that bind, for better or for worse. I'll let other people be the judge of that. Not much for me to say beyond a few housekeeping rules. The way the event's going to run is we're going to have Pauline Bastidon from the Freight Transport Association do a brief kind of scene setting, 10 to 15 minute remarks, and then we're going to the first panel, which will be looking primarily around issues relating to transport customs, tariffs, a lot of the information on the regulatory compliance side of things we're dealing with in the second panel. So the first one will probably, I don't think we're going to be able to get away from mentioning what came out today, but we're going to try and not make that the absolute focal central piece, because as I think will come out from some of the comments of people on the panel, no deal is still very much a possibility, not even just a question of if, but when, potentially with the scope for an election looming. So, and also I think a lot of the things that we're discussing here would be relevant even in a deal scenario after any potential transition period, but I think that will come out in some of the discussion. So without any further ado, I'm going to pass on to Pauline, again, who is the head of global and trade policy for the Freight Transport Association. Pauline and I have sort of worked in and around Brexit for the last sort of two or 3 years. And if there is someone who is really on top of everything that is happening from a Brussels and EU member state point of view on Brexit planning, she is definitely your woman. So Pauline, over to you.
Thank you, Ali. Thank you very much for the kind introduction. Good afternoon, ladies and gentlemen. So I'll try and justify all the praise that Ali has given me now. Yes, before I start, I want to stress I did not have the chance to go through the 500 pages or more of the withdrawal agreement, so I'm not even going to attempt to explain what has been decided or not. And as Ali said, it's not been ratified, of course, yet. It needs to go through, first of all, EU member states, then the House of Commons, then the European Parliament, then again the European Council, and only then, if no one has blocked it, can it be fully ratified and enter into force. Before I dive into the topic of Brexit, just a few words about FTA. So indeed, I mean, although the word transport is in our name, we really represent the whole of the supply chain, from the operators all the way to the shippers, so the traders. We have a sister organization in Ireland, FTA Ireland, as well as a worldwide sister organization called the Global Shippers Forum, GSF, that we provide secretariat to, which represents importers and exporters around the world. And we're also involved in a number of EU and global bodies, both from the transport side as well as the trade side. We have a very diverse range of members, as I said, from very small operators to very large integrated logistics companies, all modes of transport all the way to retailers and manufacturers. So here you can see some examples of members. I'm particularly responsible for dealing with the shippers, so the traders. So Ali asked me to say a few words about how we have tried to support our members through Brexit. So really it's both through representation, and I'm based in Brussels, although it feels like I'm based on the Eurostar really lately, doing lots of back and forth, but we're involved in a lot of working groups, as well as more senior groups in the UK, also in Brussels, and we've had quite a lot of discussions in the past with national authorities as well on practical matters, a bit less so lately, I have to admit, as discussions have been a bit more sensitive. And of course, good contacts both with Task Force 50, the team of Michel Barnier in the European Commission, as well as the Brexit Preparedness Unit. In terms of the information, really, it's a two-way flow process. So unlike some of my fellow panelists, I don't have practical experience of doing customs declarations or VAT or anything practically, I suppose, for companies, but our strength is relying on the expertise of our members. And well, we've been providing information from day one, really trying to support the industry as much as we could. The most recent initiative is a series of free workshops that we do primarily for hauliers, funded by government, so they are free to attend. And if you know any hauliers that might be interested, you can just go to our website afterwards. As I said, they are free, and we still have quite a few dates between now and the end of the year. We try and do seminars, consultancy services, all kinds of things as well, because really for us, we've recognized, certainly in the last year especially, but from the beginning, that there was a very serious risk that things will get disrupted, that things would change drastically, and I think we'll go into that in more details during the panel, and you'll see why it's very important to prepare for that potential outcome and these changes. Some key implications of New Deal, I mean, there are many, but I think much has been said about potential disruptions and border delays. I think disruptions need to be understood in a wide sense. It's not just trucks waiting in Kent to be able to cross through Dover to France. It's also maybe in some cases hauliers refusing to take loads if they don't have proof that the right formalities have been established. It's also hauliers being turned away and denied boarding, and not just in Dover, by the way, but every single port, because of course, regardless of the mode of transport or route used, the obligation for the trader, the bottom line remains the same. You still have to do customs declarations, you still have to do your regulatory obligations as well. You need an export health certificate if you're exporting agri-food products, for instance. So that wouldn't change. This is something that could well happen even with a deal. It would very much depend on what the future relationship looks like. Pressure on transport services is something we're very acutely aware of because, well, you might think that transport is something completely free. You just need to buy a truck and then you can operate freely. No, whether it's aviation, rail freight, or road haulage for that matter, you need to have agreements between different parties to be able to operate between one country and the other, or within the EU as well for UK hauliers or air freight companies. So this is not something that comes by default. And yes, we have contingency measures on the table, but only for a limited amount of time. And obviously, everything will have to be reopened if there's no deal at the latest in July of next year for road haulage and October of next year for air freight if something more permanent has not been negotiated to replace these contingency measures. There will be pressure on transport as well from a sort of routing perspective, because although the responsibility for complying with customs requirements, for instance, is very much with the traders, in practice, the one that will be made to wait or will be turned away or not be able to progress will be the driver, probably, or whichever mode of transport has to take the goods to a port or to the other side. Customs formalities, VAT changes, tariffs, we'll get into that later, so I won't now, but that's going to be across the board. And by the way, there will also be implications for global supply chains. So even companies that perhaps are not that integrated with the EU, maybe don't trade so much with the EU, if you trade with countries that currently have a preferential agreement with the EU, some of them will be rolled over, some of them won't. And in some cases, the replacement agreement that the UK has negotiated is not quite equivalent. So it's very important to pay attention to that. There will be regulatory implications and additional costs, obviously. I think for customs alone, the government estimates that the total cost for the UK industry will be £7.5 billion per year. That's just for customs. It's not the full picture in any way. Obviously, mitigation measures for potential border delays, the cost of paying for the vet to sign the export health certificate, or the cost of the sanitary inspections at the border inspection post. All of these things come on top of that, of course. And then access to skills is a huge worry for us because logistics relies quite heavily on EU workers, actually. The segment of logistics which relies particularly on EU workers is warehouses, believe it or not. And we have, I think, a quarter of forklift drivers in the UK, which are of EU origin, non-UK nationalities. So this is, we've heard a lot about immigration and skills in the context of agriculture, but for logistics, this is also a huge worry. And while we've seen perhaps some reassurance for workers that are already in the country and already resident in the UK, one particular worry we have is in relation to the temporary workers, agency workers that might come and help just for a few weeks or a few months every year. And obviously that don't have the status of residents and would not be eligible for settled status as a result. So we've produced something that we call our No Deal dashboard. This is just a picture of the first page, but it's basically a list of questions, big and small, certain things that require policy changes, and we're sending that every week to Michael Gove, the Border Delivery Group and others, in the hope that this will put pressure on them to provide answers. I'm afraid only about 20% of it has been resolved in a satisfactory manner so far, and I would say that a good third of it is either not looked at, or governments think they've solved it, but actually not at all, or their solution didn't help. So there are still quite a lot of key issues that are unresolved. Maybe I can come back to that on the panel. I will leave you just with something that I can detail more later as well. But for me, there are really some key questions that every trader, every retailer, manufacturer should really ask themselves. Do you know who is responsible for doing what in your supply chain? It sounds very silly, very simple, but you need to agree that contractually. It depends very much on what you've agreed in terms of Incoterms. And you need to understand also what your haulier is going to do, what you will do, what the intermediary will do, and there are specific processes to take into account. For instance, if you are using certain ports which are not in the Dover Strait. So if you're going to Rotterdam, for instance, someone in the chain will have, it's not prescriptive, it can be anyone, will have to register through a Dutch system called Portbase, which is for the whole country. This is just one example, but if this is not done, and then the MRN corresponding to the customs declaration is not registered in that system, the haulier will not be able to go through for accompanied transport, or will not be able to pick up the goods or deliver the goods to Rotterdam in this case, unless it's been done. So this is very important to bear in mind. You'll need to have a plan to know how to fulfill your obligations. For your customs obligations, either you do it yourself, but this is pretty tricky. You need to have the right software, the right skills, resources, or you find someone else to do it on your behalf. But don't wait until the last moment, because there's a shortage of customs workers in the UK, and that's one of the big problems that we'll discuss later. Then we ask our members to make sure to try and optimize their supply chains as much as they possibly can, and that's also looking at potential custom simplifications, rethinking maybe some of the flows, rethinking some of the decisions they've made in the past, maybe considering making more use of customs bonded warehouses in some cases, for instance, or deciding in some cases to decouple the UK and the EU distributions as well when the goods come from the rest of the world. And then really the important thing is to understand what will be the practical constraints on every element of the chain, because, okay, you're only responsible for certain things, but unless you understand what will happen during the rest of the transport movement, what will happen and what other links in the chain will have to do, you might find yourself in problems that you don't know how to solve later on. And obviously, only then do you need to look at mitigating any potential border delays, stockpiling and things like that. But that really comes at the end, as far as we're concerned.
Okay. Thank you very much, Pauline. And we are going to... pick up some of the questions that might have arisen from Pauline's presentation in the panel discussion afterwards. It's now my pleasure to introduce Dr. Anna Jewzuska. Almost.
Well done.
Kind of. To come and speak for a few minutes. And I think Anna's going to do a particular dive looking into the customs-related compliance set of issues here. Anna does sort of in part-time as sort of advisor to the British Chambers of Commerce, but is also a long-time customs consultant, has done her penance for the Big Four and now is sort of striking out on her own. So I'm sure there's a metaphor in there somewhere. Not that we don't love the Big Four as well. Off over to Anna. Thank you very much.
No comment on that. Thank you. I really don't know what I should be talking about this morning, actually. I just came out from a British Chambers event where we found out that the deal has emerged. My instructions are to follow with the no deal prep, so I'll just continue talking on that. We'll see what happens. Before we get into technical detail around customs and procedures and so on, probably the first point I'd like to make is around the fact that when we talk about customs, and we now, especially with this new deal, we're going to be talking a lot about borders and what happens at the border, what the customs formalities are, and so on. But the thing to bear in mind, especially if you're a business, is that the moving goods across the border part is only a small part of the whole international trade transaction. So the process starts weeks before the goods actually move and go across the border and continues weeks afterwards. So if you're a business, it's good to keep in mind that you shouldn't be just focusing on customs formalities there and then, but that it takes a long time to prepare for customs formalities, and the biggest part of that process is getting information from within the company. I usually use the example from the World Customs Organization. They estimate that any customs transaction, not customs, international trade transaction involves about 30 parties, 40 documents, and around 200 data elements that often need to be repeatedly inserted into different forms that either you or your freight forwarder needs to submit. So yeah, if you're a business, that's where the key kind of preparations or the key focus will be if you're trying to prepare for either deal or no deal Brexit. In terms of what a business can do at this point, or in general when it comes to getting ready for submitting customs declarations, I guess the first, or even if you have been submitting customs declarations, but now you're going to be submitting more of them and dealing with more formalities, the first thing to do is to look in-house and see whether you actually have a customs department, a customs team. Customs, and we always say this, customs used to be called the forgotten tax. Now it's not so much forgotten anymore. It's now on the first page of every newspaper. But very often it's one of these things where you don't know you have a customs team or a customs specialist inside your company until something goes massively wrong, until you get HMRC knocking and you have a customs audit. And that's when you find out that you actually have someone inside your organization who knows about customs. But finding these people, trying to understand where they are, which function the customs team sits within, that will be the first place to start. Then you obviously have your kind of wider circle, which is your, as Pauline was mentioning, your agents, your freight forwarders, your customs broker, your hauliers, anyone within that kind of space. So getting a good relationship in place with them. As Pauline mentioned, there are shortages of these experts around. So if you have one already, if you have a ongoing relationship with your broker, that's definitely something to look into and speak to them, whether they're ready, what can they advise you, how this relationship is going to function going forward. And then the next circle after that is your supply chain. And again, you do need to look at your entire supply chain. Just because you're not affected doesn't mean that you're not going to be affected by default because your suppliers will be affected. So a lot of the companies I speak to say, well, we're not importing from the EU, so we're fine. Well, yeah, where does your inputs come from? Oh, they come from someone who imports from the EU. So you might want to think throughout the entire supply chain, not just your own organization, because this will impact you. The same with delays at the border. You might not be moving the goods across the border, but there might be cumulative delays because the goods are, either your goods are stuck behind someone else's truck and they don't have the right paperwork. So It's all a kind of integrated ecosystem. And then the last thing is obviously keeping an eye on what's happening in terms of the latest developments. Now, I'm sure we've all been doing that, trying to understand what's coming out in terms of guidance from the government and other sources from EU government, from the ports and so on. But just trying to keep on top of all the developments. If you looked at the no-deal tariff in March and you haven't looked at it since, it's probably a good thing to do to have another look, because things might have changed, especially for some sectors. So just being aware of what's happening, and well, quite a lot of developments have happened over the last couple of weeks, and I can imagine that the next few weeks are going to be even more interesting. So I'm going to stop here, and I think we're going to go into a technical discussion later on in the panel.
Thank you. Pauline, I wonder if you wanted to maybe pick up one of the things that you referenced in your introduction about some of the areas that the FTA and many other business organizations are waiting for further clarity from government on when it comes to information that is needed to plan fully for a potential no-deal exit. If you want to maybe just go back over that.
Yes, so one of them, of course, is something we've already talked about, which is the availability of customs brokers. If you don't believe me and you don't believe Anna, maybe you'll believe the government and the National Audit Office. There was a report yesterday, which actually, from the National Audit Office, which confirmed that there is a shortage of customs brokers. So it's not just industry saying it, or it's not project fear, it's very much reality. Why does this matter? Because if you do have a customs department, you're actually very lucky. And I think that's only businesses of a certain size that will have a customs department. Businesses of a small size, they don't have a customs department. They probably don't even have a logistics department, to be honest, or a logistics specialist. And in some cases, they will not even have a supply chain specialist or manager. So then really the only hope is to go through a broker, I think, or find someone who can help you and do that. And if you have a direct contract with a haulage company and you think that this is going to be good enough, I mean, some of them will be able to do it, yes, at an additional cost, obviously, nothing is free. But not everyone will have the capabilities. Your haulage company is primarily there to drive, to transport things. They might not have in-house customs capabilities, let alone regulatory capabilities. So don't rely on the haulier, and certainly don't rely on the driver, because the driver drives, and that's really good enough. The situation for those countries who export agri-food products, and yes, the Republic of Ireland is in the EU as well, so everything applies to the Republic of Ireland as well. If you export agri-food products, then we still have, unfortunately, quite a lot of questions pending. First of all, there's a shortage of vets that are able to help produce these export health certificates that you need to be able to export. Secondly, the template of some of the certificates for specific products has not been defined, is not available, apparently because the EU does not import certain types of products. This is the case for minced meat. I understand certain types of minced meat, things like sausages, I guess. And, well, there are a few other products that are in that category. So if you're in that category, for the time being, you can't export, basically. Then we still have a problem with the decision of the UK to get rid of the low-value consignment relief. Now, VAT will be charged on every single shipment, including the ones under 15 pounds. I think there is sort of exemption, which is a bit higher, with a higher threshold for gifts of £39, but still. And the seller needs to register onto a government platform. The seller is also responsible for paying it. And if not, the companies transporting the goods have been told that they would either have to put them in storage, in temporary storage, against a substantial fee, of course. That might not always be possible, and if not, it will be sent back to the seller or destroyed. So that's not something that we are excited about, shall we say. So we're trying to get rid of it, but for the time being, with not much success, I'm afraid. The Irish border, there's a little bit of information as to how the UK would manage it in the event of no deal, but really not much information at all from an Irish government perspective. The only thing we know is that there would have to be some controls, but where exactly, we don't know. The big difficulty, the big challenge is that because this is currently an open border, you would have to restrict access to specific routes and specific crossing points, which of course, as you will understand, is a very sensitive issue. So we don't have much clarity on that, and it's not really something the UK government can help with. And the Irish government until now has been extremely reluctant to share any details, including with Irish organizations. The situation for borders after day one, so the government has what they call their day one no deal approach, and basically it means that on imports, few things will be controlled in practice. There will be very few additional controls to compared with what exists today for imports. Be careful, because every import movement into the UK is also an export movement from the EU, and well, EU member states will have to make sure that there is an export declaration in place, for instance, if transit or the carnet or something else is not used. So it doesn't mean that you won't have to comply with the rules, but from a flow perspective, at least, there's less worry about imports on day one. That's about day one. The National Audit Office confirmed yesterday that this is not a sustainable approach. It will have to change, because this is a massive risk for fraud, but also potentially safety and so on. So there is reluctance from the government to confirm whether it will change or not, but we understand that the plan in a no-deal scenario would be to impose the same types of systems as what we will see for imports into the EU, on imports into the UK towards the end of 2020. The post-day one situation for road haulage and air freight is pretty worrying as well. So the UK government has been of the opinion that they should just open the borders. So as far as EU hauliers are concerned, for instance, they will face no restrictions on day one. That's good for day one. What happens on day 200? We don't know. And because the EU is not reciprocating and will not offer quite the same level of access to UK hauliers, this is unlikely to continue for very long. So that's also something that worries us a little bit. The situation with aviation is slightly less problematic, we think, because there is precedent for standalone agreements. So hopefully that's something that could be done with a lot of political will. For road haulage, it's much more difficult because of the treatment of road haulage at WTO level. You would really need a free trade agreement to deal with that. And the risk is that we'll end up with a patchwork of bilateral agreements with individual member states, like in the old days before '93, and that's really a big worry from a haulage perspective, because it means that hauliers will have to check in every case whether or not they can deal with a specific movement. Yes, and lots of very small practical issues that could wreck things, that could completely destroy the system on day one, potentially. So even if you turn up, or your driver turn up to the border with everything ready, the barcodes corresponding to the customs declarations, everything is there, able to answer the questions that will be asked at the checking booth for the ferry or Eurotunnel, that's not good enough. Then there is an additional step during the crossing whereby the preload declaration has to be technically validated. And if that's not done, I mean, certain softwares will do that automatically. Not every software will necessarily do that automatically, and it needs to be programmed to do it. A big worry that we have, that the ferry companies have, is that the orange lane in Calais and so on could fill up very quickly. And we think that if there are disruptions, of course, ultimately, drivers being forced to wait or being stuck in the UK for a couple of days with nowhere to go, going through a very bad experience. Are these companies going to want to serve the UK market in the future? There's a big question mark there. So lots of unsolved matters, I'm afraid.
Right. So no deal doesn't get you the certainty that everyone always claims that you are provided with in the medium term, at least. Thank you very much, Pauline. I think we're going to turn now to Richard Asquith, who is the head of global indirect tax, I believe, at Avalara. And considering the last 24 hours have been, at least for people who've been glued to their Twitter screens to figure out what the latest in the deal or no deal stakes were, it's been all, why is VAT becoming the issue, that last hurdle to get over from a technical perspective. So I think Richard is well placed perhaps to explain to not only people here but all those watching just why VAT is a particular potential border impediment issue. And I think I'm right in saying that if you're looking as far as precedents for sort of a non-Brexit, a non-EU relationship with the EU, that actually aren't that many when it comes to VAT outside of the EU itself. So Richard, over to you.
Yeah, thanks, Ali. Yes, so I work in VAT, particularly cross-border VAT. I actually work in technology automation of it at Avalara. But I'm a VAT person by breeding. And, you know, when I think about what's coming at us, my own personal reaction is I feel bitterly cheated. And the reason I say that is because I trained as an auditor at the big accounting firms, and I found auditing, ticking and bashing, as they call it, much too exciting. And I thought I need a quiet career, and so I picked VAT and have spent 20 years hiding behind the EU VAT Act and the delicacies and the intricacies of that great piece of literature, the EU VAT directive. And then suddenly, as Ali hinted, even with Brexit, I keep being asked, is Brexit keeping me busy? And actually, the answer is no. It's the customs people, it's the declarations and the tariffs that are worrying everybody. VAT, as I'll come on to explain, we're not at go yet. But yet, last night I got called up by somebody from one of the tabloid papers saying, we're running with a headline, business headline, that broke Brexit. Would you like to comment on that? And I had to find out why is it finally VAT has become so prevalent, what's going on. And I think people are beginning to wake up to it is the short answer. And I'm going to embarrass my fellow panelists because I did cheat. I have read my bit of the withdrawal agreement that just came out a short moment ago, and it's as we'll see. I'll stay away from the politics of it, but as we'll see over the next few days, from the VAT point of view, what they've done is the Commission have kicked everything down the road, all the difficult issues, and the government has capitulated on quite a lot. And I think that's what's going to come out over the next day or two. Anyway, let me get to VAT and what you're interested in, what's coming, and what should you be worried about, and what should you think about? What are some of the basic measures you can plan towards? So I think the best way to think about the VAT is in business models. So, firstly, obviously, with Brexit, whether it's a no-deal Brexit or when we do eventually leave under a transition agreement, which I think is scheduled in for the 1st of January 2021. We leave the EU VAT regime, and I'll try and condense those 20 magnificent years of my VAT career down into a minute or two and explain the EU VAT regime. So we have a harmonised system of VAT around the 28 member states, and there's some countries which shadow us, Norway and Switzerland, which are going to become very important as you see what's come out of the Northern Ireland settlement. And the member states, they can only really control their own headline rates. That's the major change. And otherwise, they must follow all the different rules on the taxation, place of supply rules, what services, what goods to tax in what way. And there's even controls over the band rates. UK is free of that in a no-deal situation on the 1st of November. So we can, the VAT Act at the moment, the UK VAT Act, does replicate most of the VAT directive, but the government can start tinkering with that. But what it does mean is, and this is where it gets interesting, I think, for this audience, is we lose a bunch of simplifications, as we term them, in the VAT world. Now, the first one that hits is the big one, which will hit about 245,000 businesses, is the loss of what we call intra-community supply zero-nil rating. And what that means in English is if you're selling goods B2B from the UK to France or Germany and vice versa, there is zero VAT on that. The government's promised 25 odd years ago they would, that was just a temporary measure, but in very EU terms, what was planned to be a three-year temporary measure has lasted us to this long. So that will be due then, and this is the first red light warning. So when goods leave the UK and go towards the EU 27, they become subject to import VAT. So if goods go into France, it's 19% German VAT, and if they go into if they go into Germany, it's 19%, and if they go into France, it's 20%, and so forth. So that's the first big worry. It's a big cash flow smack, and vice versa when European goods come into the UK, they become subject to 20%. Now let's do the easy bit, the UK. The UK is rocking and rolling like it's 1984 again, and it's wham, because they've introduced something called postponed accounting. We used to call it deferred VAT. And the good news there is HMRC are going to take that cash flow hit for themselves. So as long as you complete your new VAT return, and you'll see details of that in the next few weeks, especially obviously if we hit 31st of October hard exit, then you can declare, it's a nifty bit of double bookkeeping called the reverse charge, and I won't spoil a nice lunch now by trying to explain that to you. But you can declare the transaction in there. You don't actually, if you don't want to, you don't have to pay the import VAT at the border to get your goods in. So that's really great, important news. The flip side to that is and this is important for UK traders, is bit of sort of side effect good news. If you're bringing goods in from China, which obviously lots are, e-commerce traders, for example, then you have been paying import VAT there, because obviously China is not part of the EU. The UK was prevented from extending that cash flow relief, the deferred accounting, to all countries under the WTO rules. You're not allowed to discriminate in favour of the EU post-deal Brexit. So the good news is there you will get some VAT relief if you're an importer from China. And we reckon that's going to cost the UK about £7 billion a year. Right, so now that's the easy bit. The problem bit is exporters, and I think you're going to start to hear it today. The worry is exporters, because I think as I rattle through a few of the other business models, HMRC has done a really good job, I think, in the Treasury on providing some emergency reliefs, but not for exporters. We're most worried about exporters. You know, there's I'm not sure if we've heard about EORI numbers or if someone's going to talk about them. But you know, one or two of the nasty things that have come out in the past week is it's realised that if you're exporting goods to Europe, you must get yourself an EORI number, Economic Operators Registration Identification. Maybe one of my customs colleagues will talk about that. That's going to be a blocker because nobody really understood that. But going back to my subject, VAT, you will have to pay if you're moving goods over into Europe for the first time, because we're out of the EU VAT regime. You have to pay import VAT. And not all countries in the European Union offer that kind of postponed accounting. So you're in for a nasty cash flow shock there. So that's when you've got to get into your supply chain management, and you've got to think about, there are countries where it's worth thinking about taking on the additional expense of routing your goods through those territories. So Netherlands and Belgium have got excellent schemes. And if you're going further afield into Europe, you should think about the Czech Republic. They've got a very good scheme there. I'll keep going down through the models because there's always tons of details. B2B services, the traditional services, are largely unaffected from a VAT perspective in the short term. So if you're selling consulting, financial services, etc., it's still under the cross-border. It's still under the reverse charge, as we call it. So there's no VAT payable if you're selling to a business customer. There are some differences if you're in the businesses of providing services in the country. Performed where provided, as it's called. So that's things like exhibition companies and those type of live events, you will be charged. Sorry, you will have to charge VAT if you're organising an event, for example, in France, French VAT. So there will be some changes in the VAT rules there to keep an eye on. Now let's go to B2C, where there is a lot of complexity, and one of the ones that we're worried about for small e-commerce sellers from the UK is a loss of something called distance selling thresholds. So what that means, under the theory of VAT, for consumers, it should be charged where your consumer is. So if you're an e-commerce business in the UK, you're selling to Poland, you should be charging your local consumer when they buy on the internet, 23% VAT. Same if you're selling to Ireland, 23% VAT. But Europe, when they introduced the e-commerce, when e-commerce started to take off, and even under the old catalogue selling, they realised that would force lots of little small businesses to VAT register every time they tried to make a sale. So they introduced these thresholds, distance selling thresholds, and there's only two of them, 35,000 euros or 100,000 euros, and it's only Germany, Luxembourg, and Netherlands and the UK that has the upper limit. But that's a great subsidy for small e-commerce businesses. It means you can sell under your UK VAT number, under the distance selling rules, and charge 20% VAT and declare it to HMRC. Gone in a no-deal Brexit. Gone after Brexit, indeed. In any format. And we think that's going to hit about 22,000 micro businesses that are happily selling under the UK VAT number. Now, the Commission estimates the average cost of a foreign VAT registration is about 5,000 or 6,000 euros. Not at our prices, but there you go, that's the Commission, reassuringly expensive. But that's the paperwork and the bureaucracy that you have to go to. So clearly there's going to be a lot of e-commerce businesses who are going to have to rethink their business model and perhaps get into geo-blocking. We talked about low-value consignment stock relief, as we catchily call it. That's the £15 exemption from VAT on small packages. That does go on a no-deal Brexit. VAT people are actually a fan of that because there's a huge amount of abuse of that scheme, and HMRC is taking the opportunity to scrap that scheme in the event, with Brexit, whatever date it happens. Now, what the challenge does mean for e-commerce sellers based in the UK, a lot of them increasingly, it affects imports from outside of the EU at the moment, but obviously after Brexit, if an UK e-commerce seller is selling goods to a UK consumer and the goods come from China or they come from France after Brexit, if they're below £15, then it's VAT-free. That's gone, and you will be required, as you just heard, you will be required to register with HMRC under a different type of VAT registration and charge your £15 or less to the consumer on the website. Now, a lot of people aren't ready. Their e-com infrastructure isn't ready. We know, we work with a lot of the e-com infrastructure providers, and they haven't been preparing for this. And I think it's going to be one of the battlegrounds over the next few weeks. Treasury's trying to keep, and I was talking to Treasury the other day, and they were telling us they want to keep this, and a lot of politicians see this as an eye-catching simplification. It will look good in the newspapers. Look what we delivered compared to what Theresa May was planning. So I think that's really susceptible. Then I'll try and wrap up quickly, and pick up just the important ones. If you do have a foreign VAT registration, and you would have one if you're storing stock in a foreign territory, or if you're organising events in different countries and you have to be VAT registered, as I touched on, what we will slip into a new requirement, or you will do, is to have a local specialist agent called a fiscal representative. Now, they take on your liabilities, and therefore they are very, very expensive. So the kind of strategies we're telling people to do is think about setting up a limited company just for business purposes, just for VAT purposes, to channel your transactions through. So that will get you over the distance selling threshold problem because you'll be treated by the European Union authorities as a UK member. It will get you over the fiscal rep requirements as well, because similarly you'll be regarded as an EU member. business. And just, I think, lastly, on reclaims. So reclaims, if you're not foreign VAT registered, but you're doing business in a territory, you've got salespeople over there, you're going to hotels, etc., you're at exhibitions. At the moment, you're allowed to use HMRC's online systems called the 8th Directive. You get the feeling we're not very good at branding and names in VAT. It's called the 8th Directive claim system. That's very nice. You just go onto HMRC, it's all in English. You give details country by country where you've had hotel bills or exhibition costs, or you've been charged by freight forwarders, those sorts of things. And the money, HMRC manages it for you, gets the money back from the different authorities. We lose that on a no-deal Brexit. We go back to the old paper 13th Directive regime, and that's excruciating to the point where most people don't bother. You have to submit your paper invoices in an envelope and post it off to the German authorities and hope that they'll cooperate with you. Right, sorry, I probably went on quite a bit long there, but you know, at last people are listening to me for once in my 20 years, so I appreciate that. Thank you.
And if anyone here or tuning into the live stream thinks that they just have to deal with it once and not forevermore, to I think maybe Richard's delight, I think this is not going to go away whatsoever, and will be a big feature in the negotiations on if we do get this exit deal through, what the future relationship in terms of trade is going to be with the EU. So the next speaker, and I'm probably going to sort of try and winch people down to about 5 minutes, if at all possible, max, so we can leave some time in for discussion and questions, is Pete McSwiney. Pete is the chair of Agency Sector Management Limited, which does a lot of work in the IT space, the IT solutions, in terms of the interface between sort of customs and customers, as it were, so to speak. And Pete also chairs the industry side of the Joint Customs Consultative Committee, which is basically a working group between trade and HMRC, which has obviously taken on even more newfound meaning in the last 3 years. So Pete, I'm sure there's a lot of reflections you may want to pick up there.
Thanks, Sally. Well, it's normally my job to depress you all, but I think Richard's done a stunning job on that. I mean, I used to be a freight forwarder when I had a proper job. I now work for a software company, and we provide software for predominantly freight forwarders and intermediaries, and it does customs entries or customs transactions and some back office producing paperwork and so on and so forth. Now, our focus really is on what happens at the frontier. And I think we're in the situation where HMRC, when they dreamt up the various scenarios to cope with the day one no deal or even, you know, end of a transitional period, they made some fundamental mistakes. I mean, they broke down the businesses into various sectors. So we had a particular section on Ro-Ro, a section on parcels, a section on immigration and so on. And that, you know, it's kind of okay. But when you think about it, you've got a truck coming in, it probably carries parcels and it has a driver. So there's some interaction there. And they also didn't consult very well with the people that were involved in the supply chain end to end. So they cherry-picked who they would speak to. They spoke to some of the hauliers, although by no means all of them. And they never really understood the interactions between the different actors in the overall solution. So they ended up, by the end of March, they had what they termed themselves as a number of suboptimal processes. For instance, in Ro-Ro, the solution was you pre-enter the goods. Well, in the maritime environment, where pre-entry is the norm, in places like Felixstowe, when you can lodge your entry up to 3 or 4 days before the ship arrives, you've got a long lead time for the vessel. It probably, you know, if it's coming from the Far East, it's 4 or 5 weeks on the water. So you've got loads of time to prepare your customs declarations. But in actual fact, only 70% of goods are pre-entered. So the fact that they thought it would work in the fast-moving Ro-Ro environment is ridiculous. And as they started to share these ideas with the trade, you know, the response generally was, well, that's not going to work, or, well, have you thought about that? So they then introduced various other easements, which meant, I think we've ultimately got to the stage where the systems envisaged won't work, and they've allowed you to sort of, well, don't worry about that for the time being. Yeah, just we'll kick it down the road a little bit. Now, when you consider, we currently do 55 million customs entries a year. 35 million of those are from customs warehousing. They're not really frontier activity. So the government's figures reckon there'll be another 200 million extra. Now, that equates to about 17.5 million frontier declarations a month. And if you consider, on the pre-entry, for instance, there's a manual process. You have to go in manually and arrive your consignment. Well, at the time, 17.5 million times just saying, oh yeah, the shipment's here. It's ridiculous. And you say, well, we surely have to automate. We automate a lot of e-commerce goods currently. People, some of our customers clear, 20, 30, 40,000 items in one shipment with no manual intervention. And yet this process that the government have dreamt up is all really manually based. And they're trying to shoehorn these 200 million additional declarations into a system that we use for 50 million currently. And it kind of doesn't work. So I think there's a distinct lack of enthusiasm about the different systems. As you find out more and more about it, transitional simplified procedure was one of the easements that was invented by HMRC, and that, on the face of it, sounds pretty good. You do you keep a note in your records of what's coming in, and it gives you a 6-month period before you have to do the first customs entry. And that sounds pretty good. Then you discover, well, actually, you've got to do your VAT return during this period. So you've got possibly two VAT returns to do, and you're not really going to know what the VAT is because you haven't accounted properly, or you haven't calculated the VAT that's due. So that's a problem. Then it transpires you've got to do interest stats as well. So all of a sudden, this easement becomes less of an easement. And, that's, again, as time goes on, you find out more and more little things like this that haven't been thought through. Pauline mentioned there's a number of things that they haven't had answer from HMRC on, and it's the same with the freight side. Back in March, after it all calmed down, the government took these suboptimal processes, they put them on the shelf, and they were going to roll them out again at the end of October. Well, they weren't fit for purpose in March, and they're certainly not fit for purpose in October. And there appears to be a huge reluctance on behalf of HMRC to tweak them. They're not willing to engage with the trade to try and make them more effective. So I think at the end of the day, we are going to struggle on almost every aspect of the clearance and logistics and transportation business. So you've not got a lot to look forward to, I don't think. Thank you.
I think interestingly, actually, when we talk about looking at planning and preparation for no deal, it becomes very realistic and very direct very quickly, which is the information I think the companies actually want. And sort of last but not least, because we also have Tim coming to talk about some of the more regulatory compliance requirements around agri-food, we are closing this panel with Tim Rycroft, who is the Chief Operating Officer at the Food and Drink Federation. So they are in the sectors, I wouldn't call them in the wars, but they're certainly the ones that have the most in terms of, I think, the sectors that are drawing together the widest range of issues to be looking at planning-wise. And I know particularly on this sort of no-deal tariff regime that's gone through some changes, they probably have a view in certain parts as well. So Tim, over to you.
Thank you, Ali. Those of you watching on the live stream can't see that the clock in the room is on midnight. And actually it feels like it's been 5 to midnight for about 7 months. So it seems appropriate. The great thing about being last on a panel like this is that I can say that everything that has been said is what I was going to say, because I obviously have all that level of knowledge as well. But there's been a huge amount of really important stuff. I'm just going to say a few very brief things about food and drink, because food and drink is different. It's different for a number of reasons. Most food and drink is perishable or has a short shelf life, which means delays in logistics have a disproportionate effect. Clearly, food and drink, the quality and safety of food and drink are literally a matter of life and death, which is why food and drink is often subject to much higher levels of regulatory checks in order to guarantee that those standards are being met. It's also something that is very deeply embedded often in the culture of countries, which is why agri-food is often the last thing to be done in a free trade agreement, or indeed is sometimes entirely excluded because countries just can't find a way to agree on differing standards and how they could make those work together. So food and drink, very different, and as Ali says, in some ways very exposed to the dangers of no deal. You know, as we speak against the backdrop of these events today, I think it's worth thinking about the fact that whatever happens, we're heading for a different relationship with the EU, a different trading relationship, which is going to bring many of the challenges that we thought were only about no deal, in some sense, maybe in a less extreme way, a less immediate way, but many of the challenges that we've talked about around trade, I think, are going to come, and we are going to have to face up to them. And I absolutely agree with the point that's been made a number of times about one of the most important things being really understand your business. Not just the products that you make, but every aspect of your business. So, I mean, just a couple of examples. Last year, some of you may remember that there was a shortage of CO2 in the UK. And it made the news because it was a threat to beer supplies at the time of the World Cup. But actually, it was a really big deal for the food and drink industry because CO2 is used in a whole range of food and drink manufacturing. And it turned out that there was a very small number of suppliers, and the right level of due diligence hadn't been done on the risk to the supply, and suddenly when it became in short supply, the few suppliers declared force majeure and everybody was scrabbling around trying to find supplies. So an example of something that people don't think of as intrinsic to the product they make, but is actually critical to their ability to make it. Another one in food and drink would be, as I go around a lot of food factories, as I do, almost all the machinery you see there is made in the European Union. A lot of it is German packaging material, production line material. If you need people to come and provide maintenance to those machines, or you want to upgrade those machines, you are importing a service from the European Union. You're going to need to think about how that will impact your business. So this sense of a really holistic thought about the business. Tariffs is the thing Ali referenced, and you will be aware, I think, that the government has published its no-deal tariffs only in the last couple of weeks. Very little change from what they published in advance of the 29th of March deadline. We don't, in the Food and Drink Federation, have a kind of single view about tariffs because the businesses we represent have very different trading models. Some of them are exporters, some of them are importers, some of them are very much domestic producers, and clearly the impact differs across the nature of the business model. What I would say, though, is that the tariffs are kind of very odd in the sense that some products that weren't subject to tariffs will now be, some that were subject to tariffs won't now be, and there is this extraordinary arrangement for the island of Ireland in which exports from the north to the south will carry tariffs, but from the south to the north won't. And that will introduce market distortions. That will mean that traders currently selling from Northern Ireland into the Republic, who will now be subject to tariffs, will redirect their products back into Great Britain. So at the same time as we're probably seeing price rises and some food shortages in the immediate days and weeks after a no-deal exit, we might also see some extraordinary sort of price drops and gluts in some areas, particularly, I think, dairy, as the result of those tariffs. So that and the fact that these tariffs are not really going to be reviewable for a year, by which time any damage will have been done to the businesses that are subject to them. It's just another example, I think, of a government policy that wasn't subject to consultation with business, was developed very much behind closed doors, has been driven by some expediency about the government's wish to control increases in food prices and to protect some sectors of the economy but not others. And it's very frustrating, I think, to see yet another example of things that will make life more difficult and more unpredictable in the event of a no-deal Brexit.
So we've got about 10, pushed to 15, but really about 10 minutes for Q&A. And I will do everyone a favor and not make everyone ask a question first, but if you could be thinking about it, I will kick off with a couple. And I just wanted to ask maybe Anna and Pauline and Pete as well, whether you are finding, whether it's in the members that you work with or the clients that you're representing, or just in terms of the traders that you kind of surround yourself with, generally speaking, on some of these issues, whether you're finding that a lot of traders are trying to consider of doing this all of themselves in terms of the compliance work, particularly around customs and logistics, or whether they're sort of turning in droves to the intermediaries. And I just wanted to pick up also that point about, because a lot of people think that, that there's still, the capacity issue is not as much a big of a deal as people think about it. And I wonder if you could maybe draw on some of those points. So, Anna, if I could...
In terms of trying to do it yourself, the large companies, multinationals, they already have an established relationship. So I've not seen a lot of multinationals trying to do anything themselves. They usually use a customs broker, even though they potentially have a customs team in-house as well. The problem is, as we mentioned earlier, it's the smaller companies. So I've spoken to some companies last week in the regions whereby they say they haven't really prepped. They're thinking about starting to prep now, and they're wondering how to do that. And they don't have a customs broker, and they haven't engaged with a customs broker. That obviously is not a great position to be in. But a lot of these companies, things have been working fine until now. Even if you've been exporting, you have a process in place for the X amount of exports that you do. So if you're currently if you're an SME and you're currently exporting to a number of countries, and you're already exporting to Mexico, or you're already exporting under preference somewhere else, then you think, okay, well, we're already doing that. How hard can it be? But the problem is that you have a process in place, you have a system in place, you know how to do certain things, but it doesn't necessarily mean you understand the process. You just have something in place, and you kind of continue to do it for the same exports. But if you're now talking about different products, which means different commodity codes, different destinations, everything that you need to provide for a customs declaration changes potentially. That's not necessarily as simple as just continuing to do what you've been doing up till now, because very often a process has been set in place either by a consultant or by someone who's left the company or someone who advised the company in the initial stages. So they've got the process, but they don't necessarily, they just kind of follow a spreadsheet rather than understand what this process entails. So I think that's the main issue, is the small companies that don't even now fully understand what the request, what the ask is. And obviously, if you haven't engaged with a customs broker at this point, it's going to be quite difficult. Perhaps the last point to mention is that in terms of how much you pay for a customs declaration, that price per declaration, that price can range from anything from like £10 up to £50. And it's the SMEs that will be paying the higher price. Because the multinational companies, due to the volume of import and export declarations, they get the discounts. So the £10 are for multinational companies that export and import back and forth. SMEs who've not worked with a customs broker before, they'll probably be hit by the higher prices.
And obviously, Pauline, I mean, this goes to the point that's often sometimes missed in the public debate about, you're only as good as the information you actually give to your intermediary. I think there's been a lot of noise you hear sometimes about, well, the head of export has said that they're all prepped and therefore people think they have nothing to worry about, but that's really only dealing with the part of the issue, isn't it?
Absolutely. And to start by answering the first question you had, yes, I work with some that do the customs themselves, but it's an extremely limited number. I can think of only 2 companies that I know that do that, and they are in fact primarily importers. There's another dimension, of course, to think about in relation to that, which is that you can't compare the systems you would have in place or the processes for deep-sea maritime transport, when things have come from Far East Asia and have been traveling for weeks to the UK or Rotterdam or wherever, with a very, very fast-moving roll-on, roll-off system. It's a completely different thing. And in terms of resources, the difference is between having people who work broadly on a 9-to-5 basis and people who are there 24/7. So different teams that will have to replace themselves, throughout the day and night. In fact, those of our members that are going to do it themselves, or do it themselves today, told us that they will at least have to double or triple the headcount of people that they employ. For the vast majority, it's simply not an option. Anyway, you need to purchase software and everything. So, and to be entirely honest, when we heard that the government was pre-enrolling everyone into this sort of simplified import procedure, TSP. We weren't particularly thrilled to start with, because yes, it sounds very simple, but if I can use an image to make you understand, it's a bit like, you travel a lot, you don't necessarily have to do your expense things with your company every month. You wait 6 months, and then you have a huge pile, and then you have a big deadline that you need to deal with. And that's I guess, our worry in relation to that. So yes, it might be an option for some, but I think not for everyone. And in terms of people who say, oh, we're not going to be affected, I mean, I remember still, I'm sure they must have, hopefully they've discovered that actually they are impacted, but I remember last year, January 2018, I think it was, we invited a company that produced electric vehicles to come and talk to us, more from a haulage perspective than a trailer perspective, actually, but they told us that the engines, I think, were produced in Latvia, it was assembled in the UK, or vice versa. And I went up to them and I said, okay, so do you have a plan on how you're going to manage all of this, in relation to Brexit? They said, oh, we're not affected by Brexit. But yes, of course you are, because if you're based in the UK, the only way you would not be affected by Brexit is if no one ever buys anything, from your company that has been produced in the UK anywhere else but in the UK, or you'd never ever importing things that have at some point come from somewhere else. Then of course, but how many companies are in that situation?
Pete, was there anything you wanted to add there? I know there's been some also discussion about whether using transit, so effectively for people that aren't aware of what transit is, it's sort of, amongst other things, is a system that allows, very often operated and sort of manned by the intermediaries, that allows you to sort of suspend duty payment if your products are crossing more than one EU border. But it doesn't sound, from the way I'm hearing from a lot of industry talk about it, that using transit is going to be a silver bullet for dealing with no deal either.
No, there's no magic answer. I mean, in the intermediary section that we represent, I would say most people are nervous about taking on additional business. They're not
from
really
a liability point of view, or capacity?
No, I think they're concerned that there'll be a large volume from people that have no idea what they're doing and will be reluctant to pay any money for doing it. And I think, we've had a number of hauliers who've sort of thought, oh, this could be an opportunity. And once you get into explaining to them, well, you have to do this and that, they sort of generally think, ooh, not sure about that. I mean, it's the information flow. We're talking to one customer, and we started talking to them before March, and they're an Irish haulier. They run about 8 trailers a night to Southern Ireland. They still haven't got a system in place. And they're saying that they have real problem getting information from their customers. They struggle to get, shipper, consignee, number of pieces and weight. And when you start looking at the UCC data elements, 50, 60, 70 data elements, they just throw the towel in.
And just one final question before I turn to anyone in the audience, and I might sort of direct this at the whole panel, but particularly I think maybe at Richard and perhaps Peter. There's some discussion, you hear sort of noise in the ether about how, particularly in a sort of short time frame, one of the answers must just be surely to account for customs and tariffs on a VAT return. Put it all into one document, and how can it be that difficult? And I wonder if maybe anyone who's the practitioner amongst the panel might want to pick up why it isn't necessarily that straightforward.
Yeah, more excitement in my life. So, filling in the VAT return of any medium-sized business upwards will tell you is the easy bit. It's getting the information together in the right boxes, the right format. And as soon as you go to your IT department and ask them to move something, you feel like you're talking to your builder who's built you a house, and then you say, I want a basement, and they're like, oh, if you'd only told me that, I would have not built the house this way. And that's the problem. And those sort of systems changes can present, I think, a lot of challenges. And typically, businesses, they ask for VAT rate changes to be given 12 to 24 months notice by countries, and they usually don't. So if you start jiggling around with reporting formats, that's not as simple, unfortunately, as I think it would sound. I think the other, I'll just touch on it very quickly, because our problem with the exporters side is the tax authorities aren't engaging with us on anything. So we can't get the foreign VAT registrations, for example, that we know our clients need on the 1st of November. We're technically not allowed to get them. So when we try and explain to the tax authorities, we're going to have to do things differently, they say, well, you're still an EU member, so you're not allowed to do that. So that's in the VAT world. It's not quite like trucks stuck in Kent, but it's not far away. Our VAT problems will come in sort of 3 months' time. And a nasty quirk that I found out about a couple of days there was a change of EU law, and this is going to affect UK companies that are exporters out of the EU in a different country. So if you're producing goods and they're being finished in Germany and then they're being exported to the US, you're not allowed to do that from a customs declaration and a VAT point of view, because somebody changed the definition of an exporter 2 years ago to make things easier. And they slipped in there slightly accidentally that you must be a EU resident company. And of course, we're not on the 1st of November. Sorry, it's a slight distraction. It was just listening to the other.
I think that shows the law of unintended consequences,
Yes.
which we're seeing more and more of. But I think the whole customs declaration process is not fit for purpose. As I said, you're looking at doing 4 times as many as we do currently, and most of what we do currently is from goods from ex-warehouse. I don't understand why we collect stats on the entry, for instance. That makes sense if everything is cleared at a frontier where there's a pinch point, and it makes sense to collect other information, licensing, whatever. But I think they really need to simplify the declaration process. Whether it can be on the VAT return or like a VAT return, I think is more likely. But there appears to be no mood or no desire to look at that so far.
Crisis managing one thing at a time.
Well,
it is.
If you present any business with one new planning scenario, they just about have time or resources or energy to do it. As soon as you give them 2 or 3 scenarios, they just don't bother. They can't. They've got day jobs, and that's the challenge. We've got at least 3 alternatives over the next.
So I'm going to punt it open. I think Pauline has to go. So if you need to leave, please feel free. But if anyone has any immediate questions for Pauline, I'm going to take a quick pan around the audience before I come back to any questions that I might have to make up for the fact that you guys haven't come up with questions. But I'm sure one of you might be about to disprove me. Oh, please. Okay, go ahead. Please. In fact, we might do then one at a time. If you have more than, we try and limit it to 3 questions, if that's okay.
It's really hard to kind of triage which ones I want to hit you with first. I'm Danny Ryan from Kudos Records. We're an SME, small music distribution company. Our goods don't attract tariffs, so just to give you some context to this, where I've been having real problems is inconsistencies in how we're going to deal with our exports and imports going forward. We do both. We manufacture in Czech Republic and in France. We re-export to Europe and to all across the world. So you would think our systems for exporting to Japan would be the same as they will be for the EU, but that would seem not to be the case. Anyway, I'll just hit you with the first few that have come up. TSP, we were told to register for TSP. Now, we use standard carriers for almost all of our stuff. We use freight forwarders. We don't do any of our own transport. I've never done a customs clearance in my life. My freight forwarder does all that. Why have I been told to register for TSP? And why will we both be doing customs declarations for stuff that we're bringing in from Europe?
So TSP, I guess you have the responsibility of keeping a note of consignments you bring in. There's certain data elements you have to keep a record of. And at the end of a period, which is normally the 4th working day of the following month, although there's a 6-month period where you don't have to do that. So that supplementary declaration can be done by an intermediary, by a freight forwarder.
Yeah.
But you've got to give him the data in order to allow him to do the entry.
Does he not get the data from the invoices that my supplier provide him when we pick the goods up? Because obviously he has that. Our suppliers have to give invoices to the forwarder. So do they not do the? Because when we import from the States, I know that's all taken care of, for instance.
Well,
Have you talked to your forwarder?
Well, my forwarder is asking me for is asking for a TSP number, and I'm scratching my head, wondering why does he want this? Surely it would be on his TSP number.
No, because TSP is only for the trader. So two things. First of all, whether you do it yourself or not doesn't matter. Legally, you are responsible.
Right. Okay.
Okay, you're always legally responsible. Secondly, TSP is just for the importers, for UK importers. So someone else cannot register on your behalf if you want. You have to register your company, or someone has to register your company, and then they can use that and do, all the
So they can
sort of background work.
So
But
in the same way that they can do a VAT, they can do VAT deferment under my VAT number, they can also do my customs clearance under my TSP number on my behalf.
they will use your
provided
EORI
they've got
number.
Right.
They will use your EORI number actually. So I don't think there is a TSP registration number or anything
There
like
is,
that.
yeah. It's a massive long digit.
It's the EORI number, I believe, which is the.
But it is a separate thing. There's a TSP registration number as well. There's yeah, I was
Okay,
given one.
this is
so.
news to me.
The problem occurs as well if you don't use the same forwarder for everything. If you get something arrive with a fast parcel operator, then your forwarder that's responsible for your subtext won't know about that shipment. So there is a big responsibility on you to try and, to keep the information of everything you receive in one place. Then if you've got that information, you can then give it to somebody else to do the declaration. But bearing in mind, if you've waited 6 months, and you've got a fairly, like the expense account, I do mine every 6 months, so I know what a pain it is. So, if you hand a load of records like that to your freight forwarder in 6 months' time, he won't thank you for it.
Right.
Also, one more point here on what you mentioned. Can they just not get the information from the invoices provided by my supplier in the States or somewhere else?
So
you were asking whether your freight forwarder can just get the information from the invoices provided by the exporter, the seller in the US or something else. On that point, that you're legally responsible for that. Even something as simple as a commodity code, a product code, the HS code, there are differences obviously between commodity codes used by the EU, used by the US. If your freight forwarder on your behalf declares the US commodity code, and that's a wrong commodity code, and there's a difference in duty, this is fraud, this is non-compliance, and you're liable for that. So it's actually better for you to be involved in that process than to rely on your freight forwarder to do the work for you, because if something happens, it's not them who
right. I mean, all our
pays for that.
goods don't attract tariffs anyway, so it shouldn't be that much of an issue.
Still non-compliance, but yeah.
Further two questions, because it's as thank you very much, Pauline, for coming. Because I want to close this out probably in about 5 minutes to allow for time for the next break, and we can pick up some of the other detailed questions. If you could just summarise. One's absolutely even better.
The other one was about parcels coming in, and where are we defining parcels? At what point? Because you have this, my suppliers need to register to pay VAT on export. So at what point is it a parcel?
Well, £135.
Yes. So
basically.
Yeah. Yeah.
I think we've probably all got different answers to that, but from what they're introducing, is a scheme which is being spread around the world now. So it started in Australia very successfully, but now what we're doing away with is the concept of import VAT on those parcels. VAT is not paid at the import. Instead, the seller should. This is the option that HMRC and all the other tax authorities are trying to push sellers towards, is to charge at the point of sale. So online, if you're paying £100, then in theory there should be an extra £20 on top to cover the import VAT. So you pay to the seller, and then the goods, the parcel, if it's declared sub £135 or below, that it should fly through customs, and customs are promising, you know, there'll be a virtual green channel for those. So the way tax authorities are selling this is it will speed up the process for it, and so it will do away with what we have at the moment, either the goods get stuck in customs, or when the goods arrive and it's delivered by DHL to you or mine house. I think we've all been through it when we've bought something from the States or China. We suddenly get this extra bill from the FedEx chap saying pay. They're trying to do that. So that's the positive sale from it.
I've got time.
Are there any further questions in the room? We'll take two at a time if there are two, and then wind up.
Thank you. When you have talking about customs duty, you have customs duty for import and customs duty for export. But you used the term import VAT.
Yeah.
I didn't
so
understand.
the customs guys might shoot me for saying this, but I never say export duties. Duties and VAT are taxes that are payable when goods arrive at the border and to clear to clear the border.
So there are you just use a different word for customs. Is that what you're saying?
Who, me?
Yeah.
Customs tariffs, duties, so 5% non-refundable cost that you have to pay when you're clearing goods through customs. And the VAT, you're also liable to pay VAT at 20% in this country. That is recoverable if you're a UK.
No, I understand that, but the term VAT stands for value-added tax.
Yes.
And of course, when you haven't added any value by importing it.
So why you have to pay import VAT is to level the playing field for local sellers, because you can imagine if I'm in the US and I can sell to a UK consumer without having an import a VAT charge on it, then I've got a price advantage over the UK seller who does have to charge VAT. But it is recoverable if you're VAT registered.
No, I understand that. But the other question I had was these 200 data elements. This lady used the term, what is these data elements? What is that?
So that was the World Customs Organization estimation about an international transaction. So that's obviously customs formalities. If you've ever seen a customs declaration, that's about 50 boxes with different data elements. But you also have other elements. You have financial transactions. You have, you speak to your local authorities, you speak to the international authorities, and by speak I mean submit documentation, not speak as in don't talk to them, you just submit information. And then trade finance as well, yes, all these logistics providers, hauliers, shippers, all this kind of happens, the international trade transaction happens as an exchange of data with various data points. So you have to provide the data and various points. We talked about the commodity code. You have various types of data that you provide to your freight forwarder. They provide it to the shipper, and so on and so forth. The different numbers to identify transport, truck, driver, everything together. You'd have a number of data points throughout the transaction. Does it make sense?
Well, it makes some sense because the other gentleman used the word declaration, and I suppose all this information is in that document.
So that's one declaration, but apart from the customs declaration, you have other documents as well. So that's one customs document, then you have shipping documents, you have financial documents, you have a number of documents. Customs is just one part of the entire transaction as well.
I think maybe Anna was sort of saying that in terms of all the different parts of the new data journey that traders may be looking at, there's a lot of different points at which to be considering. That might be a very simplified summary of it. Do we have any further questions before I draw the session to a close? No. Thank you very much to the panel.
There was a question.
Oh, there is one. This is why my mother says I do need to wear my glasses.
Thank you. Elizabeth Geoffrey, Creative Industries Trade and Investment Board. One question I've got is nothing to do with creative industries, but just out of interest, I saw a political commentator who's so far been getting it right, who has said, what's the issue about if we were to maybe have a free trade agreement with Australia and they shipped every goods to Northern Ireland and then it came across the sea to the UK, will there be some sort of routes that people pick up and do things to try and cut tariffs?
Yeah.
Yes.
Certainly.
Yeah.
Tariff, circumvention, tariff jumping.
Almost certainly.
Different words depending on who you talk to.
I mean, to quote
This
one
is
of
the fraud section, I think. This is the best bit. Give me a pencil, someone.
Yeah, to quote one of I was on a select committee with a gentleman from Northern Ireland, and he made the comment that petrol smuggling in Northern Ireland is a national sport. And wherever you've got differentials, there are people that want to exploit them, and mainly criminally.
Yeah, and the word you hear a lot in the negotiations and going forward is tolerance. We will accept 2 or 3% fraud. The Northern Ireland settlements, I mean, I'm retiring to Northern Ireland. There's so many opportunities for VAT fraud now in that withdrawal agreement. It's extraordinary, absolutely extraordinary.
I think maybe the problem with sort of the approach that was mentioned before is it may be X percentage now, but the more potential you have for the loopholes, the more that people look twice at a certain jurisdiction. So that's probably what the EU have in mind. If that's all for now, thank you very much to the panel. Just to say to everyone, we're going to have a coffee break in here for the next 15 minutes and reconvene for the second panel at 2:45. And that panel is looking at a lot more of the regulatory compliance side of planning, everything from industrial goods to agri-food, and looking also at intellectual property provisions with a sectoral spotlight on life sciences and pharmaceuticals as well. So see you back here in 15 minutes. And if we could just thank the panel, especially for going into the sort of in-depth discussion in the usual way, that would be great. Thank you.